Good evening. This is Dividend Coffee, and it's been a interesting day today. Um, but all that I really want to concentrate on today um, is actual dividends. I started this journey um, obviously just before August, and my very first dividend was um, City of London investments, and I had the huge sum of 0.11 pence, so 11 pence. Then I did put quite a lot into Lloyd's Bank, and that went ex dividend, and that was the first time I ever had over a pound. So I had £1 and sixpence, and I bought in heavily to them because they were. I think it was because they were low at the time. So and I'm not even sure whether I realised they were going ex dividend at that point, but they did, and that was the result of it. And so I think this £1 and sixpence from Lloyd's Bank Group was more luck than judgment. And then I had a dividend of 0.05p from BP. And then after that, I had a dividend of 0.21 pence from GSK. So the dividends are slightly fluctuating, but really, I'm sort of only making really pence at this point. And I think that if you kind of um, looked at just my dividends, you'd probably think he's probably wasting his time, and which in one sense would have been a half truth. I put more effort into this than I'm trying to learn about the stock market, being an old age pensioner, and really than the value of the actual return. But also, it's something that I enjoyed actually doing. So it didn't really necessarily follow that the dividend return was that important to me. And it was just all that I was trying to do was seeing um, if I could slowly increase these dividends. And at the same time, um, take a profit as well on different stocks. And the difficulty with this was that it meant that I had to sort of jump in and out of certain stocks, even ones that were paying very good dividends, especially if the price of the stock went up. And I noted very early in that often the price of the stock would go up and I could make more of a profit actually just by selling that stock than actually waiting a couple more days for the dividends. And a good example of that was recently with Shell. I done the calculation, and the I actually had more money because of the stock actually going up in price than I would have got back from the dividends. So it was well worth my time at that point selling out. Then I bought back in, and the price went down and back up again. And then what happened was that I decided to wait for it to go ex dividend, and it did. And then during the huge drop, I tried to get out the market quick, and really I lost out. I think that was my biggest drop of around about £2. I don't know whether it's between 40 and 70 pence. £2 that I actually lost for the very first time. So it was a loss that I made, and I think it was the biggest loss that I made. So yeah, it's something that has to be thought about and considered. And if I was to do that again, I would put a um, like a stop um, loss, but like a stop limit with actually a limit to it as well, not just a stop. Anyway, moving on. Then I had, I think you start to see there's a slight increase here. No? Green Coat UK, and I had an amazing 22 pence there. And I am sure that some people say this is just laughable, but it was kind of encouraging as well. It's gone from this BP 5p up to this 22 pence. And then I had City of London Investments, and I had a 25 pence. And then further on, I had B&M, and I had 41 pence. So we're starting to get to we're going down a road here, and the further we go down, seemingly, the more money I'm making in dividends. And then after that, I got 56 pence from BP. And if I went back down, I think the first time I had 5 pence. So it wasn't always the case. Vanguard, S&P 500, it's a very low yield, and I got 0.9 pence. And then GSK, you start to see it now coming up. So it's going from 41, 56. If we exclude the Vanguard, 77 pence. And then nationwide, we have 95 pence. Duke Capital, I didn't have a lot of shares in there, so that was 27 pence. And they pay out 4 times a year. But we're considerably doing better. We're sort of improving as we're going along. Then Assura, 23 pence. And then Halfords, we had 55 pence. And then BP Group, we had 70 pence. And you see this like increase again. And then we had Vodafone, and we had £1.30. Now, what I think was encouraging here is that we can start to see that there is this like increase in dividends, and also this shows that. So we got to the point where we've got £1.30 from Vodafone, and this I'm incredibly pleased with, and I'm very surprised as well. So we're now hitting in dividends over the £1 mark. And then my next one was amazing, and this is the most I've ever made from dividends with one dividend, and that was £3.44. This was a special as well, so this dividend was a special, and I think it was 15p a share. So I think that's why it was so much. So in the future, I don't expect to be getting £3.44 every time I get a dividend. Probably around about the £1 something mark. But what this is actually showing is that the more I actually have in total money invested into the market, the higher my dividends are. So the more I've increased it from £15, and the more it's gone up, the more dividends I'm getting. So there's a relationship between the amount of money that I'm holding in stocks and shares and the amount of dividends that are actually getting paid out. So I guess you'd even calculate some sort of ratio from this. But certainly that's what I believe is going on. So the total dividend figure today is now £11.07, and I'm incredibly pleased with that. That's far in excess of anything I could have expected at this point. And it may seem a little amount of money, but it's also completely free money, especially as this is going into stocks and shares ISA. So there'll be no tax to pay on it. So that's all good news as well. So this is probably going to be a little bit of a shorter video today because I really don't want to have this too long. But it just shows my journey with dividends, and it also shows my overall journey. I can just go and have a quick look at orders because I'm now at that wonderful figure of £1.03, £103, sorry, and 29 pence, and it's been really great to break the £100 mark in realized profits. So this is the first time that I've achieved £100 or more in realized profits. So realized profits is when you actually buy shares and then sell out of them, and it's the difference between the buy and sell price. And since start my journey, I now have my first £100 and in realized profit. So what I have noticed is the more I have in shares, the more money that's been invested, the quicker this realized profit is growing. So it just means that instead of buying like 20 shares in a company, I can buy, say, 80 or 90 shares in the company, and my ratio within the amount of shares for that company as opposed to any other company is like on a level footing, and that's what I'm trying to achieve. Sometimes I have bought into companies that have a it's like Greg's really came down in price, and I believe that was a good time to buy in, and I've made quite a few pounds off Greg's in profit, but it just meant that I had to put in a little bit more into Greg's, but then I had to have a strategy to slowly reduce that down just in case Greg's did go down, and I didn't want to have all that money in Greg's. I think at one point I had up to about £450 in Greg's, and if you take my whole portfolio, which is at the time I think it was £1,270, and so that was quite a high percentage of my whole portfolio. So yeah, sometimes if you want to try and make a little bit more money, you have to put in a little bit more risk to it, and so it depends how you analyze risk. And my view was that if the price had started to come down, I was going to sell out, and as long as I was selling out above what I bought them for, I was quite happy to sell out a couple of shares at a time, maybe losing a little bit of money out of it because they could also go back up, just to make sure that the risk factor of being in Greg's with such a high amount of money was alleviated. So I actually had a strategy in place to slowly sell out as the price came down, as opposed to when the price goes up. So I think that worked out really well for me, and I think one of the things you have to really consider is that one of the strategies I've started to use a little bit is if the price starts to go up, then I'm happy to buy in more as long as the buy in more is less than the amount that I currently hold in it. because if the price then goes down, I could still sell out, make a profit, and still be above my buy-in line, because the buy-in line would actually go up then. So um, that's just one strategy um, that I should be considering and using. So so that's what I'm trying to do. So it's all about not only dividends, it's all about realized profits as well. So you've got the realized profits of £103 and 29 pence, and dividends of £11 and 17 pence. And of course, there's the interest of £3 and 97 pence, and I think we'll discuss that in another video. But yeah, it's something that should be discussed, and the risk of actually having interest in the marketplace, and it being outside of your stocks and shares ISA, if they apply interest to it, and when they don't, it's inside your stocks and shares ISA, so it's a lot more safer. But that's for, I think, for another discussion another day. So back to dividends today, and I think I'll leave it there, showing the total dividend value of £11 and 17 pence. So I'm very, very pleased with that. And yes, thank you very, very much for anybody who's listened into this. And I think it's a good opportunity as well to thank all of my I don't think I got that many, but the subscribers I do have, I'd just like to thank them all for subscribing, and that's really been good. And I think I'll close it out at this point. So this is a old age pensioner, 60 plus, who's definitely got a bus pass, and who's in his spare time thoroughly enjoying trying to um, make a very small profit out of the London stock market. And so if I've achieved those goals, which I think I'm moving towards, I'd like to get £150 so that I can say that I could buy coffees from Witherspoons for the whole since I started, and that would be probably about 18 months. So we'll see how it goes. So £150 is really my target to get that by Christmas 2000 and the end of 2025. So it'll be Christmas at that point. So if I can get it by the 1st of January, and or just before, that would be absolutely marvellous. If I could get £150, and that would be my goal. Anything further would be an incredible bonus. But at the moment, we're at £100. Of course, there may be times when I need to sell out of a position if it seems to be really bad, and I might lose a couple of pounds. So maybe my realized profit could go up or down a bit as well. So we'll have to see how all that works out. But at the moment, I'm not doing too bad, and I'm thoroughly enjoying it. And to be honest, if anybody has a analytical brain, and I think you have to be and I think you need to understand risk and risk tolerance, and if you can do that, then I think you do quite well with I think anybody would do quite well with stocks and shares. But I think the important thing that I'm certainly learning. I'm learning something new every single day. I learned something new with Shell the other day, and the thing that you have to do is only add proportional to the amount of knowledge you have. So don't start off and put a huge amount of money into the stock market without building up your knowledge at the same rate. That's what I'm trying to do. I'm not giving anybody else advice, but that's the way I've tried to do it, and I found that to be a very sensible approach. So again, I'm starting to waffle on, and I do tend to waffle on, and I'm going to close this out now. So yeah, thank you all. So ring the bell, subscribe, and anybody wants to place any comments for other people to read, feel free to do so.